Hello, everybody. Jackson here with the Wealth Squad today, talking about inflation and most importantly, what you could do to fight against it. So we're looking at inflation numbers tomorrow. Last reported was 7.9% year over year, which means that within the last year, so last month was March 2021 to March 2022, the cost of general living grew 7.9%. That's the inflation numbers. It was reported as 7.9%. So tomorrow or later today, if you're viewing this in a different time zone, we're going to see the new inflation report, and it's supposed to be much higher than 7.9%. Um, I'm not expecting much more than 8 or so, 8 something, point something. If it would be 9 or 10, that'd be crazy. But regardless, inflation is high. It's the highest it's been in 40 years since the early 1980s. What you have to do in order to fight against it is invest in something, rather that be literally stocks, crypto, business, um, knowledge courses, a private business, stuff that turns your money into more. So stocks is definitely one of them. It's the easiest one. You can track it easily on paper, easy for tax time, not much questions about stocks. However, we are checking out the latest dip when it's come back around, right? We're seeing an action, basically a reversal. And you can see that here within the last about a month. So what are we trying to achieve here? We're trying to turn our money into more, beat inflation. Now beating a 8% inflation is hard because the stock market generally returns 8%. And if we're at the same level we've been at since August of last year, we're not making much progress. That's a 0% return since August. So what we have to ask ourselves is how else can we do that? So we have to turn away from the general indexes and look at more alternative investments. And this would be aka more risky. So let's check out some cryptocurrencies that could potentially fit the bill. And cryptocurrencies are also pretty cheap right now. You can see most of them are down tremendously from the highs. Right now we see Avalanche at 70s, in the 70s. Uh, Once we see below 70, that's the buy zone for Avalanche, for AVAX. So that's when you should get your money ready, put into your crypto account, and start averaging into some Avalanche. Under 70, watch out for that. Ethereum, uh, around 3,000 right now, not near the buy zone of 2,500, but you can see that if it follows the other cryptocurrencies that we're seeing, then we may see here soon. Bitcoin, on the other hand, one of the not a very good performing cryptocurrency in the last year, right? Down 33 or so percent. Still not in that buy zone of 38 to 29. That's when you like to see it, but generally it could just be from 40s. But I like to get it as cheap as possible, so under 38 is pretty good entry for Bitcoin. And the good thing about Bitcoin and cryptocurrencies, but mostly Bitcoin, is you can't pump up the supply, right? The supply is 21 million. That's how much Bitcoin will ever be created, ever. That's written in the code, right? Every dollar is nothing compared to what it will be in 10 years because 10 cents could have bought you a meal, you know, however many years ago, right? 50, 60, 70, I'm assuming. Now it can't buy you anything, right? People, you walk across on the ground without thinking twice. So what we have to consider is assets will grow, the dollar will not. The dollar will always shrink. It's a guaranteed 8% or so loss. But when you invest it in stuff, invest it in assets, you have that option to make money. And that option to make money is beating 8%. If you make 5%, you're still losing out on 3% a year just because inflation is outpacing your returns. Bitcoin, solid vehicle. However, we're waiting for a little bit cheaper. Same with Ethereum and Avalanche. Let's check out Solana. This one came back down and fast, right? 144 just at the beginning of the month, now at 100. I'm still avoiding Solana for the time being. I do think it may have room to go lower. It just hasn't found its ground yet. Let's check out some others. Chainlink. This one's fairly cheap, trading around 13. And you can see Chainlink's had a pretty wild year. Let's make this look better. And right now, obviously, it's in the buy zone, but this one's more of less volatile. So you're going to wait longer for a significant return, and that might be fine for you if you're risk, conservative and don't like risking much money. Then it fits the bill. Now let's check out some stocks that we could also fit into this category. Sophie, this one's a pretty risky one at $8 now, and has never been lower. And it's a solid company with a lot of growing customer base, right? And it has a lot of stuff. It's not just a bank, right? It's a all-in-one money center, right? You can invest with it. It's on your phone, right? It's targeting millennials. Could definitely have some future. Right now, trading at all-time lows. Not much hope into this one for shareholders right now. So it could be a good time to get in. On the less risky side, we have Starbucks trading at $80. You can see last time it traded at $80 was, or the first time was June of 2019. So it hasn't moved since June of 2019 from then to now. Obviously, it's gone from 100 to 50 to 120 to now 80 again. All the while being paid dividends. You have to consider the dividends, right? So Starbucks, not a bad one at $80. Let's check out Triple M, 3M, 150. First time it was ever 150 was a long time ago, 2014. This also is a very, very slow mover, very stable stock, but also pays a solid dividend. So will it be inflation? Probably not, but it's better than losing a total 8%. Let's focus on more stuff that could beat inflation. We have Roblox. This one's a very, very solid pick. If it could zoom in for me, you can see right here, Roblox trading at 42, 43, was once trading at 35, and was once trading at 140. Lots of volatility for this one, a very volatile pick. However, has a lot of room to grow. It's one of the metaverse stocks, and that's not put lightly. So definitely looking at Roblox as well. And then we got one more tonight, and that's Facebook, just because it's coming back down. I'm going to get in around 200. I already have a couple of shares, still holding on to. But I'm looking to get in more under 200 and start loading the bag, right? Because Facebook is not going away. I do not think that Facebook will go away. I do think that it will eventually hit all-time highs once again. And I have some, obviously, numbers backing that, right? The earnings and sales are better than expected. Not necessarily this quarter. As you can see, we lost to estimates, which means we made less than expected. But every other year, you can see since the scandal broke out, we've been pretty dang good. So I do assume and expect that Facebook will come back to all-time highs. Not relatively soon, but eventually. A couple years down the line, I'm fine waiting for that all the while I'm in the green. Because I'm in the green currently, but I'll start buying again under 200. So I hope this clarifies some stuff for you. You just have to get this in your head that money sitting in the bank loses 8% a year, almost guaranteed. And that's at least, right? Inflation is growing, not shrinking. You're better off putting your money in assets that may or may not go up or down, but you are taking that risk, and risk is all the matter, right? You're risking zero by keeping it in the bank. You're taking the automatic 8% loss. Risking it in a stock, you can make 20% or you could lose 10%. Now, as long as you're risking something, risk is not bad. It's good in the right scenario. So I hope you get that slammed in your head. You just have to remember risk is not all bad, especially in this economic time. It's good. It's necessary to make money. So thanks for watching. We'll wait to hear from the inflation report tomorrow, and we'll keep you updated on Twitter and Instagram as always. Thank you for watching once again, and have a great rest of your night.